Hello, and welcome to the Baird Trust Large Cap Equity Fourth Quarter Portfolio Recap. My name is John Watkins, and I am a co-portfolio manager on the strategy. Jumping right into performance, the table at the top of this slide shows our performance track record. We had a good fourth quarter that capped off a very strong year with our portfolio outpacing the S&P 500 in both periods. So for the quarter, we were up 11.9% gross of fees and 11.6% net of fees compared to the 11% gain for the S&P 500. And for the full year, we were up 33.2% gross of fees and 31.5% net versus a 28.7% gain for the S&P 500. We are thrilled with our investment performance, both in the quarter and for 2021. But at the end of the day, our focus is not on one-year periods. We are trying to compound your assets at an attractive rate over many years. It takes more than just a year or two to truly harness the incredible benefits of compounding. So with this long-term goal, we believe it's extremely important to not get too focused on short-term investment performance, good or bad, and lose sight of the ultimate long-term goal. On the bottom half of the slide, we've listed our top and bottom contributors for both the quarter and the year. Moving on, this slide shows our recent portfolio changes. In November, we actually made two changes to the portfolio, which were our first changes in over a year since August of 2020. In early November, we eliminated our position in Northern Trust. Northern Trust's business performance had been below our expectations, so we simply decided to move on. With the proceeds, we added to General Electric. GE is a company that is still in transition, but we believe the future for the company to be much brighter than the recent past. This is primarily driven by our belief that CEO Larry Culp is one of the most talented business leaders in the world. He's made substantial changes inside GE over the first 3 years of his tenure, and we think that sets the company up for a prosperous future. And then in late November, we trimmed Microsoft and added those proceeds to Johnson & Johnson. Microsoft was trimmed simply because it meaningfully exceeded our 8% single position size limit. And then Johnson & Johnson is one of the leading healthcare companies in the world and has been a long time holding in this portfolio. When we decided to trim Microsoft, J&J was trading at a substantial discount to our estimate of its intrinsic value, which afforded us an attractive opportunity to add to the position. So while trading activity was relatively muted in 2021, our research activities remained full steam ahead. We studied many new businesses, added several companies to our watch list, and we stand ready to act when future opportunities present themselves. This slide shows our current sector weightings as well as our top 10 holdings at the end of the quarter. Just one quick comment on the sector weightings. We are bottom-up investors, meaning that we are looking for businesses and management teams that meet our investment criteria regardless of what sector or industry they are in. All our investment decisions are made this way and are never based on any sort of top-down sector exposure. The weightings in this table on the left are simply a reflection of where we are currently finding the best investment opportunities. These weightings look different today than they did 5 and 10 years ago, and you can expect them to look different in the future. Finally, just a few big picture comments on the portfolio and our outlook. The past 2 years have seen very strong equity market returns, which has surprised many investors given the backdrop of a global pandemic. When you take a step back, we think that the past 2 years should really serve as an emphatic reminder to all investors that future events and the stock market's reaction to those events are unknowable. Even with near perfect knowledge back in January of 2020 of all that would transpire over the coming 2 years, it's very hard to imagine anyone even predicting positive equity returns, let alone the more than 50% increase we've seen in the S&P 500. We know we cannot predict the future, and we also are reasonably sure that the future will contain surprises that are hard to imagine today. And that is why we stay laser focused on our time-tested investment process that has served us well over the past 25 years. It's easy to become distracted by shiny new things that may seem to be easy paths to riches, whether they be IPOs, SPACs, money-losing tech startups, or cryptocurrencies. But we will remain focused on doing what we do best, which is finding great businesses with gifted leaders at compelling prices and with the intention to own them for many years into the future. That does it for the Q4 portfolio recap. We look forward to reporting our Q1 results to you in April. Thanks so much for your time.